Joe, good afternoon. How are you today?
Good, how are you?
Welcome to this is podcast 3, right?
Number 3.
Number 3, the market update with Mike and Joe. So, as we did this about 3-4 weeks ago, true to form, we got to talk about the Bills,
Absolutely.
right? So, I guess for me, obviously, was a massive win. The highlight was Josh Allen leapfrogging that player to another first down that obviously got to the winning drive, but certainly sets them up to hopefully have home field advantage here at the end of the season. What do you think?
That's the hope. Get the AFC Championship game come to Buffalo.
I know.
That'd be huge for them.
Who are we playing next week?
This week we got the week off. It's bye week.
Oh, it's a bye week, so we can rest up.
Yeah.
I know we got a lot of people that are hurt right now, so it's going to give them a little time to heal up. So
hopefully get Trey White back, come back healthy off the bye.
Exactly. So we're super pumped about the Bills. But obviously, the folks on this podcast want to talk about the market. Where I wanted to kind of start, today is, one of the things that, we always keep track of is, each month, we take a look at the transactions that GRB does so that we can really try to, spot trends, what's going on month to month that might be helpful to our buyers, to our realtors, as they approach now the fall winter selling season. And Joe, as you know, historically, a lot of buyers are on the sideline. Listings sometimes are a little bit lighter this time of year, but the truth be told, it's really a great time for a buyer to be in the market because there's not as much competition. And what I wanted to do is really kind of look at this from, really talking about facts versus fiction. Yeah. And I think that, when we drive into work, you watch the news, let's face it, the news is pretty negative, right?
Right. A lot of grabby headlines, prices going down, prices going up, rates going up.
Right. Yeah. So the press is really locked on to, that rates have gone from 3% to 7%, and all of that's true. To me, the part that's being missed is that the market has changed, quite a bit since, say, the March, April, springtime. And I think we need to really kind of talk about and give some examples of what those dynamics look like so that buyers, I think right now, need to, certainly rates have gone up, but they need to really re-enter the market, talk to their realtor, talk to their lender about, what's going on in the marketplace today, what's my payment going to look like today. So let's talk about a real life example that took place here at GRB the past 3 weeks. So many of you that live here know that, Webster, just using that as an example, has been obviously a very attractive place for people to live. And it wasn't uncommon, Joe, what if a house was listed for $250,000, let's say back in March, what would that house, if it was in good shape, how many offers would they have received, and what would it have potentially sold for on average?
Right. Usually we were seeing, back then it was 18 to 20 offers, right, from what we were hearing, and going $100,000 to $150,000 over asking.
Right. So fast forward to today, we had a transaction that we did here at GRB, very nice house, listed for $275,000, in good shape, good schools, and they had 4 showings for that house, 1 offer on that house for $265,000, $10,000 below the list price. And when you think about, what that house would have sold for, to your point, Joe, back in the March, April timeframe, it would have most likely sold for a lot more than that. So to try to put that into context, so back in, let's say, for instance, March, that house, let's say for instance, it sells for $100,000 above the list price, what would the mortgage payment, the principal and interest payment, have been on that house at 3% versus a buyer that bought that house today, granted at 265 at an interest rate of 7%?
Yeah, so I did the numbers before the podcast so that
Yeah.
nobody thinks I'm a genius, even though sometimes.
Yeah.
But if putting 20% down on a $350,000 purchase, that payment would have been around $1,335 a month. Putting 20% down on 265, that payment would be about $1,460 a month, right? So about $130 more per month at the higher interest rate, but you're saving, $85,000 in that instance on that house, which in turn, one, could turn into equity in the property based on what's going to happen in the coming markets. And then two, you're not going to have the direct impact on your tax assessments. So it does in the long run. I mean, for $120 more at a 7% rate versus the 4% that we were seeing back in March, like we talked about it in the last podcast, people's rents are going up by that or more, so does it make sense to get back in that market and start to look at these houses that you don't think are attainable because of what your experience was when it was so competitive? Right. Now that there's less competition in there, getting out there and actually looking at talking to your loan officer, talking to your agent on, what can I afford and what are those houses doing today? I mean, the education piece, like we've been talking about, is so important.
Right. Yeah. And you're right, Joe. I mean, you hit on a couple of really important points. I mean, rents are not going down, so you look at, someone that, and when you look at the population of buyers that we have here at GRB, which I think represent what's out there in the total marketplaces, a good 50% are first-time home buyers. So if you're a first-time home buyer, the options that you have are either you're going to continue to rent. Potentially, if you're renting now, you might be getting a notice that your rent is going up. Or if you're living at home at this point, trying to save up, really now might be a great time to really revisit and jumpstart your home search again to make sure you're working with real numbers and not what you see on the news. And I think that's what we're encouraging our team to do, the realtors that we work with, is to make sure that all those buyers that are sitting on the sideline, revisit the marketplace today, re-engage in that search and make certain that you're working with real data that represents what's going on, in October and as we move through the fall and the winter months.
Yeah, and actually, another benefit we're seeing one of the benefits I guess we're seeing from rates rising is everybody's savings account rates are going up, right? Mm-hmm. So you're getting more money from the bank when you keep your bank there or your money there. And, really looking at too, does it make sense to put 20% down on a house? Mm-hmm. That cost of PMI and your monthly payment at a 95 LTV versus an 80 LTV may not be worth putting all that money down. And, if it only raises your payment up by $100 a month, if you can afford it. Right. So that's something that we're starting to see shift as well as, and I think that's an important fact or fiction, right? Like we talked about, you don't need 20% down to get into a home. A lot of people may be, living at home trying to save up. Well, I got to get to 20% to put down because that's what my uncle told me I needed to do. But in reality, with that 5% or even 3% down in some instances, you can get into the house.
Right. And again, the last point on this, there's no guarantee of this, but, certainly, the folks that are really try to predict rates in regards to where they're going to go, certainly think that within the next year or two, rates are most likely going to come back down. Again, there's no guarantee of that, but the whole notion that we talked about before, date the rate, marry the house, I think is alive and well. And I think people need to take that into consideration when they're evaluating whether or not they're going to buy a house. So we had some questions that were submitted, and we're going to take those now, and I'm going to read those off. Okay, so the question that came in, which is very timely, is what impact will student loan forgiveness have on home buyers in this area? Joe, you want to take that?
Yeah, so there's still some details being ironed out. The application did go live, I believe, last night, so people can start applying for this forgiveness, and it's either $10,000 or up to $20,000, depending on what types of student loans you have that can be forgiven. So let's take a borrower that has $20,000 in student loans. Per Fannie Mae guidelines, you have to calculate 1% of that $20,000 as a monthly payment, which is $200 a month. So that buyer instantaneously, if they're able to get that $20,000 forgiven, has now gained some buying power because that's $200 more that they can afford in a monthly mortgage payment. And if you go by the 0.5% factor, it's $100 more. Either way, the impact there is, they're going to be gaining buying power with that $100 or $200 a month extra that they can afford in a monthly mortgage payment.
Yeah, I think that's great, and that's great insight. And again, for the realtors, the lenders that obviously all work here at GRB, just going through each of those buyers, identifying, certainly it shows up on their credit report when they have a student loan, and giving them counseling about it, because a lot of people might not be aware that that's out there. So step one is let's make them aware that that option does exist, and then encourage them to do it.
Right. And we're also going to see now, as a lot of these loans come out of those deferments, people entering back into the income-driven repayment plans, which gives them a much more reduced payment compared to using that 1%. And we've used that a lot to qualify borrowers in the past, where using that 1%, it doesn't work. But once they're able to enter into that income-driven repayment plan, getting that low monthly payment and documenting it, we can use that lower payment, which helps them qualify and gain some buying power as well.
That's great insight. I think we had another question that was submitted. Again, this is just something that I learned this morning, that Rochester, New York was voted the #1 most neighborly city in the United States.
Hot off the presses.
Hot off the press. That makes me feel good about living here.
Absolutely.
In terms of it's a community that's affordable. We give back to the community. We're involved. We care about the folks that we work with and that we live with, and I think particularly again, going back to the spirit of this podcast, whether you're a buyer that has lived here their entire life, or they're thinking about moving to this area, certainly portrays a really positive light on the area. I know I've lived here I grew up here, moved away for a bit, but have moved back here and been with my family in this area now for close to 30 years. How long have you been here, Joe?
So I grew up here as well, moved away, and have been back since 2009. So 13 years back here.
Yeah. So kudos to the entire community, to our local leadership, and I think that's super exciting. So with that being said, we appreciate everybody listening into our podcast. If there's additional questions that people out there want to ask us that we didn't talk about today, you can submit them to our website, and we look forward to talking with everybody within the next month for podcast number 4, the market update with Mike and Joe, and thank you for being part of it.
Thank you.
Have a great day.